And now, to share with us his technical view on the local market, let me introduce to you our next speaker. He is the Vice President of Sales and Customer Support of COL Financial. He manages the day-to-day operations of COL's business centers, its sales division, as well as its customer support division. He also spearheads the COL Investor Seminar Series, the flagship investor education program of the COL. In 2018, he was awarded the Best Technical Analyst by the Fund Manager Association of the Philippines, making it his 5th consecutive year to receive this award. Ladies and gentlemen, let's all welcome COL's Chief Technical Analyst, Mr. Juanis Barredo.
Good morning, everybody. Thank you again for gracing us with your presence. We normally conduct this particular session once or twice a year to be able to keep you guys in touch with what's going on with the current market conditions. And it's really nice to be able to show that much of what we were talking about into the first half did manage to surface, and we've maintained a pretty elegant movement, although it was not a straight line up, it was quite choppy. But we've still seen the index to be able to score pretty good gains so far. Okay. In our last Outlook session, we attempted to be able to look into the technical readings of things, and we've managed to be able to point out to you that during that particular time that the index was up about 7%, and it needed to be able to push itself down for a little bit of a correction. And we offered two different types of scenarios, of being an optimistic one, and of course one was quite a bearish one. But it was nice to see out that it was the more bullish ones that managed to be able to story itself to us. And if you notice, we just copied much of what we pointed out last time. And we said that the first half will be plagued by some zigzag motions. And as long as the index manages to keep itself above 7,300, and the index should be able to conspire to show more potential upsides for us. And clearly enough, that's what happened. And we kept ourselves aligned towards an index target of about 8,600. Now, at the high that we've seen so far, which is about 8,416 or so, we still missed it by about 200 points, but we're keeping that particular target for this particular year. Just to be able to show you, the blue line you see on the screen is where we were last at when we did the last Outlook, and we were saying that the index needs to make a little bit of a correction first before climbing again. And as you can see from here, where is that? Okay, so we've managed to be able to pull back quite a bit. It made a typical A, B, C type correction, and after that, prices managed to be able to pull up. So far so good. April did tell you that we've motioned ourselves back into a bullish market territory. A bull market, in definition, is a market that manages to climb itself 20% over the last major low that it managed to do, and that was the one way back here last year. But year to date, we're doing something about 10%. So the correction that we've seen pulled back about 50% of the rally that we've managed to do, and this is a typical place to anticipate support, and we've seen the index climb up quite healthily since. In terms of performance into the region, I've managed to be able to compare the 10% gain that the PSEI managed to put out as against some of the other markets you see beside it. And if you notice, the 10.8% gain that we have pretty much outdoes a lot of those markets in Asia, except, of course, what happened in China. China had a pretty good rally, but it did manage to be able to pull back as well. So we did pretty well in that particular time period so far. So moving on into the second half, we will maintain our bullish approach. Although since our index has gone up about 10% for the year, it might need to be able to duck in and out once in a while to do some small correction. So what we've managed to be able to see during that particular time period was that we've seen the market manage to be able to push up all the way to about 8,400, and we've anticipated that a correction could come in, and I'm looking at maybe a potential pullback, maybe closer to something about 8,000, 7,900 or so. But if things go wrong, maybe a base case scenario for that would be pulling it back somewhere closer to 7,750, and that being the max of that particular event. Now, the reason I'm anticipating that is because there are some hurdles that may be coming out from other markets that might allow our market to take a pit stop, and that's a reason why I think that you might have some hiccups to anticipate along with the current bullish stride that we particularly have. So with those potential pullback situations that we have, I really feel that the potential for the market to be able to continue on will still be there. Like I said, do expect the choppiness to persist because like we said in our title, this is going to be a long and winding road. So that means the upward path will be long, but the path that we're going to see is going to be somewhat of a choppy one. So in this particular picture that you see over here shows you a longer term picture of the PSEI. I also showed this picture to you guys last time, and that's a very, very long-term chart, and just want to point out that in this particular situation, that if you notice on the first left chart, where the blue arrows are pointing, that means major lows managed to be able to create themselves there, and the index managed to move up. So that's why when I did this in the first half and we did bounce from that low point, I felt quite good that we had good momentum stride to be able to pull up. But of course, coming from where we are right now, we're a little bit over the middle area, and so I would anticipate more hurdles to be able to pass over. The picture on the right chart, I managed to be able to draw out an Elliott wave count. This is not a very, very long-term picture, but rather one in the medium term. And I think that we're building on what is known as a wave 3. And that means we've seen the first wave. Okay, but anyway, if you can follow what I have on the right side of that graph, you will see a swing 1, which is the move from roughly 6,800 to 8,100. Then a wave 2, which moved back down. And then, of course, the third swing, which is where we currently are. And I dotted a very blue line there to be able to give you an anticipation of the choppiness that we will probably be seeing here. Okay, now what contributed to this? Now I feel very strongly that the reason why your market managed to be able to, of course, increase its value is that, of course, there was a pullback in the government 10-year bond yield. And as the prospect for interest rates to pull back came in, then you've had markets be quite sensitive to that, and that's why we've managed the index to be able to lift. So if you see the chart we have here, the blue-colored line is the 10-year bond. And if you can see what it's been doing in recent months, you've seen a drastic decline. April did point this out earlier, pulling back from 8.3% roughly to about 4.5%. And that is a material decrease in that. And that the market used to be able to fend. That's why if you notice, properties were pretty strong because of that. Some banking stocks also managed to pick up. And but we have seen rates come down quite a bit, resounding much of the expectations that will be potential pullbacks here. Now, what I've done is, again, I'm looking at the PSEI index, but this time, if you see on the bottom of that graph, I colored something with 3 colored lines, red, blue, and green. I'm using a technical indicator there called the percentage price oscillator. I just changed the numbers because I wanted to be able to depict something. I wanted to show you what the thresholds of the market are given the swing condition it has. So the basic swing here is that you have a market going up in a very, very wide range. Now, are we on the upper side, or are we threatening the upper side of that range, or are we coming from the low side or the middle? Now, if you look at the indicator below, the middle blue line has already been crossed by the price. And you see that that particular value is coming closer. It's now trading somewhere closer to about, I think it's about closer to about 6.1 or 6.9%. And if that stretches up all the way to about closer to about 10% in value, that would mean that the market would be kind of stretched in terms of the swing condition. This thing is measuring the distance of price to its 200-day exponential moving average. The more you stretch that, the more extended the market becomes, or overbought the market becomes. So what that's telling me is we're not on the low side of the market, we're not in the middle of the market, we're coming closer to the upper side of a market, but there is still room. And because the market still has room, I try to be able to measure what that potential for an increase would be, and that value that I also came out using this configuration came out to about 8,630, which kind of aligns with my 8.6 particular target. So just to show to you that I don't come out with these numbers just by thought. I mean, it is done by, of course, some degree of calculation. So based on the short term, the Philippine Stock Exchange is index is still very much on an upward trend. In the very short term, we've got an index support target of 8,062, followed by 7,920. If this too can hold, that will show you how resilient the index is, and that the potential to climb up in the short term will still be quite available. So we're looking quite fondly about these particular indications. It's just that it's come from a little overbought condition, and that's why the market will have to be a little bit more choppy. Now, the other factors that I also will be watching are movements from the United States, movements of currencies, particularly, of course, the peso and the dollar. And, of course, the third component there is that I feel that there's some markets in Asia that are starting to show some tenderness. And because of that, it might impact some movements we have in the interim for the Philippines. And that's why it will contribute to some choppy action. So we'll start with the US market, being the biggest market in the world, and the S&P 500. You can see in the chart here, it's really managed to be able to raise up quite a bit. I did not think it would go up that strongly initially, but when we saw that the market managed to pick up from the 200-day moving average, it did manage to be able to push itself up quite well. Now, I feel, though, that this is also reaching a point of inflection. Market is overbought, momentum is being lost, and indices that are coming from such conditions may be subject to a lot of profit taking. Another indicator, which I used earlier, the PPO, or the percentage price index you see below, again, you can see this index is already trading on a 10% line. That means that the S&P 500's price is already stretching to about 10% over the 200-day moving average. And if you see that red line cutting across, that is the threshold that it usually hits before a major correction settles in. So also this points out to be able to anticipate that there could be a potential wider correction to the US market. And as you know, as the US market sneezes, all the other worlds will attempt to be able to retreat as well. So I don't think we'll probably decouple by a heavy amount. I think there will be some sensitivity on our case here as well. So we do have to build this in. In terms of the US market's yield, this is the 10-year bond yield in the US. And this is also the reason why a lot of some other markets around the world managed to be able to show positive stride here, is because we've seen that the 10-year yield has also fallen quite a substantial amount. And because of that substantial pullback, that it contributed to the market's bullishness, and hence why the S&P 500 managed to be able to continue with its particular rally. Now, I know we're coming up with a Fed rate decision next week, and that could be quite a bit an event, as a lot of people are watching over that. If they don't get the number of cuts that people are anticipating, I think the market may withdraw. And the bond market's recent rally is trying to be able to tell us already that there was a camp that was extremely dovish. That means some people were even anticipating a 50 basis point cut at the end of this month. But now people are talking back to the 25 basis point. And some people might say maybe it might be 2 or 3 cuts, maybe it might even be less. And because of that, the market might attempt to heave in if they realize that such components will be not as dovish as what they originally thought. Okay, in terms of the dollar managed to be able to make quite a bit of a rally. Now, I think it's taking a little bit of this recent rally because bond yields are also making a rally. As they felt now that there was no need to cut the rates back into the US, the dollar said, okay, that's not going to hammer me too much, so this is the reason why your dollar has managed to be able to make a recovery. The larger picture of the US dollar maintains a very upward stand, so I think it will continue to trade within that band. And so this rally that you're seeing here might obviously affect our currency. And that's why, if you're looking at the peso, you can see that the peso has actually taken quite a firm stand as the peso-dollar rate manages to be able to pull back. I do not see that trend ending. I still see that the stronger peso might be in light. However, maybe the decline we've seen might be been overdone, and a little rally may come up into the peso-dollar rate first. So I'm anticipating that if a rally comes in, maybe looking at a rally between 51.30, 51.45, maybe maximum 51.75. But the position of this image is still pointing towards a stronger peso formation. So a rally into the peso dollar should be something that you should take advantage of by selling. Okay. With regards oil prices, Now, oil prices normally is very sensitive to the movement of the US dollar, but recently I've seen some disconnect into that particular relationship. Right now, I think oil prices will probably be consolidating within a fixed band. I've drawn a blue line to tell you the low sides and the red line to contain the upper sides of oil. I would not think that oil prices will be a threat in terms of any inflationary movements, because I do not anticipate oil prices to go up by a significant amount. I think rallies will be muted to the band that I pointed out. In fact, there could still be more sideways consolidation for the meantime. With regards to gold and nickel, there was some exciting action here not too long ago. We saw gold prices break out of a particular pattern up there in the upper left-hand side. I did see some notable names from people in the US talking about a very bullish prospect for gold. But unfortunately, because of the rally in the US dollar, it kind of killed that initiative to climb, and is the reason why the breakout we saw in gold was quite stunted. And now we're seeing gold attempt to pull back first. Now, I'm watching this carefully, because if this crosses below the 20-day EMA, or exponential moving average, which is that orange line that you see there, there could be a wider correction into the gold market. Maybe by not so much, because the dollar position may not really go up by too much more. But I don't think that people who entered that position in gold will be immediately validated on their trade. So expect a little heavy motions first in gold before you see any continuing flows here. With nickel, now nickel prices also managed to be able to climb up, maybe not primarily on the movement of the currency alone, but also because of some demand action on its components. But I think the price of nickel climbing up was a bit too fast. And because of that nickel prices may have to be able to do some correction as well. Now, I'm talking about this specific metal, which I don't normally cover, because there are quite a bit of nickel companies in the Philippines that I've seen a lot of you guys trading, particularly Nickel Asia. And if you're seeing that movement, and it needs to breathe in, then perhaps the stock price might need to do the same thing, breathe in as well. And if you're looking for opportunities, running after it after a really heavy push like the way we saw before, I think you have to be able to wait for these corrections to give you a better opening, just like you see the price of nickel managed to be able to correct as well. Now, the other problem I see here is some weakness in Asia. If you look at some of the markets I have here, let me just list them out. China on the top left, and the upper middle, that's Thailand. Then you have Singapore on the right. Then below you have India, you have Indonesia, and you have Malaysia. Now, these particular graphs of these particular indices are showing some momentum loss. Some of them are already shown some corrections coming in, and that could be a problem if we see more of that happen. So imagine if this continues and the US market manages to be able to continue, that might be able, and correct rather, then you might see some compositions into corrective strides come in as well. So I think that might be a little bit more difficult to keep our market afloat. And while these guys are going down, I think there will be some sensitivity to the PSEI index as well. Okay, so just to be able to summarize that, I think in the short term that the PSEI may be put in a little bit of a corrective situation, but I still feel that the angle of the market should still be upwards. And so if we do have some pause points or reactions, do take advantage of them. I've laid out the foundation for support between maximum 7,920 to about 7,750. If the risks do show out into the US, maybe also some movements into the dollar peso and pullbacks into Asia, that should, don't get scared out of that. We're telling this to you today so that you can be prepared to act on it. So build that into it and should be able to give you the proposition for the prospect of when to get back inside. Of course, the rally wave, I feel, should try to be able to extend itself. I told you the target of about 8.6. It could extend a little bit more, but we'll keep it at that for the meantime, and I'll just update you if I feel that the market can generate more momentum. And I still feel that stock selectivity will still be key here. Although I do see quite a bit of index names that can be responsive into a rally. So I will not tell you to stay away from an index, because there's a lot of index names that still look okay. But maybe not every single index stocks will probably move, because I do see quite a number of index stocks still pointing down, and I've not seen that trend change as of yet. So So the issues that I would be personally looking after in terms of my watch list or my radar, I've indicated some of them into this particular table. Now, the first table you see on the left side, these are stocks that are building current patterns right now. These are setup formations that may be looking quite better, hopefully into the next couple of weeks. Some look like they're trying to base already, so that might also bring out an opportunity for you. Now, the list of stocks on the right side. Now, these have been doing quite well recently, but I think a number of them have gone to an overbought condition, and these guys need to be able to pause or react. And that's because of that I tell you that in these ones you have to wait for prices to be able to subside before you look for the next opportunity to do that. If you start running after many of these things, especially if some of them are parking and you think that they're making a pennant, a flag, these are patterns that are temporary that you think will break out again, just make sure, and I think April said it earlier, do not be so aggressive with them, because the more likelihood is that we will see a contained reaction from them. So better if you buy this on the way down in those particular cases. Now, we've reviewed some of the picks that you guys asked for, and I've managed to be able to look at a few of the technical conditions for some of these. The top issues are listed into that table that you have. Now, I won't go to each one of this in this particular table, but I will go to each one of those stocks. You can take a picture, or when I send this to you over your emails, you can just use the ranges on the right side to guide your hand in terms of where the next support targets are, and of course where the potential profit take targets will be in terms of when I say what the resistance targets are. Okay, so I've got 3 minutes to go, so let's try to do this as quick as I can. So Ayala Corporation, I think, was doing quite well, perhaps a beneficiary of much of the other subsidiaries. It's managed to be able to try to backdoor, and that's because we've seen a lot of those movements, I think, in 2 or 3 stocks, and that's probably the reason why Ayala Corp has been quite strong. I feel, though, that it's coming towards a major high point, and I'm thinking between 1,000 to 1,007 that we might encounter some heaviness there. We're quite close to that, so just be a little bit more discerning that that area is not so far away, and that I would be looking to gradually take some profits and potentially buy these positions back when you see that duck back into the lower end of the price channel that it has. Next, we have Ayala Land. Now, as I pointed out in the previous couple of slides, I told you that properties seem a bit extended to me. This is one of them. And just to be able to show you that it's climbed up quite a degree already. Okay, so, and we're coming from a high point, and it's managed to make a little bit more of a reaction. I'm thinking support closer at 50.60 to about 48.70. So maybe just wait a while, wait for prices to pull back into those areas. Now, I also want to be able to make sure that you guys keep an eye on what happens to interest rates. So, depending on what happens to the US and how we motion interest rates in the Philippines, remember, properties are very sensitive to the interest rate market. Okay, so just in case something untoward happens there and that rates may not be pulled down as aggressively as what they think, then it might affect some movement into the property as well. And that would be negative if they don't pull rates down too aggressively. Next, we have BDO. BDO has also been quite strong, but I think right now it's probably going to compose a small pattern, a sideways pattern at that, and you'll probably get your support area maybe closer to that 145 zone. And if it manages to be able to break through that, then maybe just a little bit deeper, all the way up to about 138. Again, try to buy these things on the way down, right? If this is going to zigzag upwards this way, you don't want to be buying after zigzag going up. Wait for it to come down first and let these trend lines guide your hand as to what the next purchase will be. All right, then we have BPI. If some of you are wondering why was the up move in BPI so large, it's really because it went through an extensive decline. A massive selling campaign to be able to drive the price lower. And while the rest of the market, especially some bank stocks, were actually rallying way ahead of this, these were the ones that were left behind. And eventually, because of that, the information that they had was that they were picking up some shares from that lower end, and that's the reason after breaking out through a downtrend line, it had a very, very sharp advance. Now, I think the advance have been a bit too extended. That may need to park itself as well. So again, either wait for the consolidation reaction before moving into BPI, because your potential for an upside compared to a downside is not so good, and it makes your risk-reward strategy not too attractive for you at this point. So wait for pullbacks here. All right, then we have Chelsea. So, this is one of those latest stocks we've been covering now because we never had this within our radar in the last so many years. But again, you've got a very, very sharp advance only to be, beset by that big decline that we have recently. Normally, after a shock like that, the tendencies for prices need to quiet down before they reverse. So I hope that we're coming towards the tail end of this, but if that still breaks support from those two lows that it's managed to hold on right now, you could still see a little bit more extension into the decline before it attempts to base. But I would say majority of the decline is priced in, maybe a little bit more, and after that you'll probably see a turnaround condition for this. Next we have Cebu Air. I suppose you were all familiar with that very, very big day. And, it happens once in a while as long as systems allow it. And hopefully, if there is no threshold to contain the decline in the closing price, and unfortunately, that's the reason why that human error conducted it down. Immediately the day after, the stock managed to be able to recover. So, if I could just erase that, maybe I would. But unfortunately, that was a reality. Some people were able to buy down there, and some people sold along the way on the way down. But try to ignore that big red line and just keep composed with the channel that I've drawn above there, because that should be the worthy trading range for Cebu Air. So far, so good. But again, buy this on the reactions closer to the blue line, as those are more preferable in terms of support. Next, we have Cemex. Now, Cemex has broken through an uptrend line for now, so it's going through a little heavier correction. But so far, it seems like an ABC swing has managed to be able to flesh it out already. So I'm thinking maybe a support between 257 and maybe worst 236. After that, maybe they should try to be able to turn itself up once again. I feel quite good with this because if you see the pattern on the left side, it's managed to break those three highs. So I think this is just an interim correction for the meantime. So I think there will still be more action for this later on. Next, we have First Gen Corporation, also very, very sterling advance that we've seen because of the overbought condition. You will see it wind up again, which is what it's trying to do. So you've got two choices here. If you have a position, I would suggest maybe just hold on to it and bear with some of the corrections. Or if you want, you can lighten up a little bit and buy it back if we do see prices manage to be able to go closer to the red line, which is roughly your next moving average after the 20-day. So far so good. I don't really see anything untowards this other than it's overbought. Next, we have ISM. Okay, so I think you guys have to realize when you guys are trading issues like this, especially where a big fundamental change may be changing, that such changes may take time and that it's not an overnight affair. So if some of you guys are banking on the potential third telco business, and whether you're buying this or the other small issues that you think is still going to participate in that, please remember that from the moment that that speculative piece of information is launched to reality telling you that it's actually going to the business, to the fact that earnings are finally going to be taken away from a company, that could take 2 or 3 years. If the company will only start getting their subscriber base by 2020, it might take some time before the earnings flow will come in. And here we are trying to buy very aggressive swing ups like this, where you should be, if you think you're going to pitch yourself for the long-term prospect, you wait for declines like this, then you gradually buy it, and then you wait. But when you see opportunities to sell it with those things going to the upper band, sell it first. Benta muna ninyo yung mga ganun, and then wait for the buyback propositions. That way, while you're waiting in a very big pattern, you can make a little money. Rather than having to sit through this, where you're going to have to strap your seatbelt on, and it's like a roller coaster ride. Wow, it's like, and you'll be choking on the way down, excited on the way up, and I don't know how much, medicines you'll probably have to down to be able to keep you calm through that particular swing. So take take more long-term action for this because it takes time to rejuvenate this business. Jollibee. So everybody's been talking about this. I mean, on that day that stock started to fall down, I mean, I lost all the battery in my phone for answering all the text messages I was getting. How come you guys weren't texting April? How come you were texting me? Look, sometimes a stock may be driven to a fire sale, and I hope, April, you can correct me later. If that's a fire sale, you should learn to be able to take advantage of it. Being a technician, we wait for the right moment. Now, yes, we've seen a massive decline. Who's to say it's going to stop there? It's very hard to say. It's possible there could still be major sellers who don't agree with a particular program. Try to remember what happened many years ago with a company called Del Monte, where they acquired this particular US-based version of themselves, telling the rest of the world that we can do your business better than the US could. And whether they could, that might take several years for them to recuperate the investment they had to do by acquiring that business. When they did that, the stock price also fell down. Okay? It might not be apples to apples with what's happening with Jollibee, right? But I think Jollibee should be able to contain this in due time. I don't think they would have acquired that unless they felt they had a good chance on turning that company around, because it did register a $21 million loss in the last earnings report that we saw. Right? But I'm sure a lot of people were calling me. Either they were scared because of the decline or asking me, ito na yun, can I take advantage of it? Can I buy it now? You really have to ask somebody else. No? You cannot bring yourself to just decide on your own. Uy, mukhang maganda na to. Well, look, what do you have to lose? If you're long-term in this, few days ago, it was all the way up there, and now it's with a bigger discount after acquiring another company into its coffers. But I think where it is, it fell to a major low that it did before. That's that blue horizontal line you see. That's where the major low was before, and it seems to be parking itself there for now. If you're buying this now, you're buying this only for a rebound trade. Okay? Because normally what happens after this is it will rebound, then it will go back to that low and try that low one more time. I hope it doesn't do that, but normally that's what happens after this. And it's possible that a basing pattern could surface from that. So just understand what you're getting at. So the people who are buying here, maybe if it rallies 61.8%, sell it first, then you can look to be able to buy it back on the next consolidation. Next, we have Metrobank. Well, I think the worst is over for this. So it's managed to be able to create a nice base for the area pattern, and now it's broke out, but because of very fast movement, similar to BPI, that it needs to be able to wind back inside. So look for the buybacks here and the potential move back to your shorter-term moving average, supports 74.20 to about 73.50. Then we have MegaWorld. So again, property company, which all have darted up quite strongly, and I would be more inclined to buy this and pull back to support rather than buying it at where it is. Even if it goes up a little bit more, I would still be looking to buy this on pullbacks to the lower end of those price channels that you see around you. So just skip with those programs, these for the properties. All right, Metro Pacific. Now this company's been in the doldrums for quite a while already. Now, again, there's an opportunity that's knocking on the door. We have a wind-up of an area pattern brewing up there where resistance is closer to about 482 to 489. If prices can somehow break over that range, then we can start looking for a potential target back closer to 6 pesos per share. But if, again, this locks itself here and it really cannot break from that range, then it might need to finish winding that pattern up first. I think every good stock will have its day, all right? And so for those people who've waited, you might want to have to wait a little bit more. But I think potentially there is a pot of gold at the end of this rainbow. We just have to be patient enough to be able to do it. You don't want to lock up a majority of your portfolio here. You can keep it where some other potential issues are showing much, much better prospects. But once that pushes out above the 489, 490 level, I think you probably want to take this as a position. Semirara. Now, Semirara's managed to be able to rally quite well. Unfortunately, DMC has not climbed that substantially yet, but I think Semirara just hit major resistance, And that might need for prices to compose for a while. And that would be about between a range of 24.50 to about 24.80. And I was looking at support maybe closer to about 23 or 22.30, so that might be a better chance for you guys to buy. SM Prime. Now, why this has been a laggard in terms of the other property companies, maybe you can ask April later. But right now, the technicals are still not favorable. It's closer to coming to the major lows of that particular pattern, and that raises a threat. I would only really be looking at this if it can bounce from that area of support, which is closer to about 37, I think. Yeah, 37. Or maybe if it can break out of the resistance band, which is standing at about 39.20 or even 40 pesos. So for now, maybe I'm lying low with this because the consolidation is still taking place and it's telling me it's not finished yet. And finally, the stock everybody was asking me about this morning, PLDT. Now, this company has slid back into a wider corrective movement. The price channel is quite evident on the way down. And I think that the support estimate for this is still standing closer to about 1,100, maybe as far as 1,020, which is the lower end of that range that you see on the left side. But I think this needs a little bit more wind-up time. So again, my aggressiveness in a stock like this will really be very, very minute, if at all. I think I've shown you quite a number of issues that look better in the short term. And I will anticipate that maybe one day when that downtrend line breaks, then we can move back into this. In fact, Globe Telecom's picture is much better than this, so I would probably be looking at that one first for a potential breakout. Well, this one, we're still waiting for support to be able to conduct itself. Okay, so I think that was the coverage of all the stocks that you had to be able to look at. I will email all of you guys a copy of this so you can get the ranges that we were talking about. And I hope you guys do participate in the Q&A section upcoming so that we can manage to be able to cover up a lot more of their interest into the stock market. Again, I'd like to say thank you for everyone's participation. And again, just be resilient. We're going to have a choppy ride here, but we feel quite strongly that the bullish nature of the Philippine economic condition should keep the stock market pretty much afloat despite the choppiness. So with that, ladies and gentlemen, thank you again very much for appearing today.